Hey everyone, and Happy New Year. Thought I start the year with a bit of a 2024 preview, maybe even longer term than that. And to do that, we take a step back. We look at the long-term log charts and see where we are. I drew this last year at the beginning of the year, the long-term channel for SPX. We had this trend line here, the one at the bottom. Decided today to show the broadening formation from the 60s to 70s period. And how I see things playing out is one of two scenarios, and I'll showcase them here. What we can see here is that when the midpoint of the channel is a major pivot, like when we break out of the mid through the midpoint, we have a surge up, then it becomes support, we keep going higher and bouncing off the midpoint. When we lose the midpoint, it's pretty bad. Like it becomes resistance, we get rejected of it, and we usually tend to, there are only two times, but we tend to retest the lows. And let's draw a bit here like this. It becomes support. Eventually broke below, it becomes resistance, and then we have a flush down like this. Then it takes a while to get back above it. It's still resistance, takes a while, but when we finally break through, we have a big surge up. Then it becomes support. When we go below it again, we have a flush down. Again, resistance, resistance. We had a surge when we went below it, above it, and now it's looking like it becomes support. So the first scenario that I see is uh, the one where we have turned it into support. We can retest it multiple times in the next couple of years, but generally speaking, we go up and from time to time we test the midpoint, something like this. Actually, I'll do it like this. Eventually, we might break down, or might break out, and we have a surge going into a lot higher. This seems absurd, like we can see like 13K on SPX or something like that, but it has happened in the past, and a breakout can be a very powerful thing. Like from 95 until 2000, we went up from 500 to 1500, like 3x, and like 3xing from 5K is quite possible. So don't think we'll get it anytime soon. And these things take years to play out. Like the one, let's see, we break out here, and from 54 and keep going up until 69. That's a lot of years. Uh, when we break down, we do it fast. Uh, and the other scenario is a broadening formation. Like this is from the 65 until, let's say, let's count until here, like 73, 75. Uh, and because we have a similar setup to the 60s and 70s, uh, I think we may see the broadening formation. I will give it like 60-40 towards the broadening formation. And the broadening formation, I think we can consider this top trend line to be the top, and the bottom we don't know yet. If I were to guess it, it would be something like this for the broadening formation. And this is the monthly chart. How it can play out would be like we get a small correction, we test the midpoint again in until March, like in January, February, March, I don't know when exactly, and then we go to 5400, 5500 on SPX, and then we have a bigger drop. We lose the midpoint, and we retest this at 4500, 4600, something like that. We go back up, something like this, similar to what happened here. But again, this will take a long time to play out. We could see like one of the drops this next year, even though I do it in 2026. It's still plausible for it to happen this year. And this is like a decade. This is the lost decade in stocks, where inflation adjusted stock market returns were negative, uh, and because we have an environment where inflation will always threaten us for a while longer, uh, it's plausible that we can see something like this happen to the stock market as well in the next decade. Because we have two paths moving forward um, regarding inflation. Inflation, if deficit spending continues at the rate it's going on now, uh, inflation will come back. If deficit spending is cut, we are looking at a large recession risk. So there's not really that big of a win-win scenario for 2024 and going forward, uh, because rates will have to stay high. If the deficit spending continues, they have to finance debt and they will have to issue long-term bonds. That will make yields spike again. Market won't like yield spiking, and so on. But we won't get a recession because deficit spending continues. The economy will keep going because there's money injected into it. So we won't get a recession for a while longer. But yields will stay up, inflation will stay up. So this is the likely scenario for next year because it's an election year, and I doubt they will cut spending in an election year. The other scenario is if they actually cut deficit spending, yields can go down, but then we risk seeing a recession because the economy doesn't get stimulated anymore, and we we get a recession basically. And again, I doubt we will see that next year because it's an election year, and that is unlikely to happen. So my top target for 2024 is like 5400, 5500 for SPX. But I think we get a substantial pullback along the way, at least one. Usually, the big one comes in right before election, like in September. OPEX starting September goes until November, and then we get a huge rally after the election in from November until the beginning of the next year. Okay, so that's kind of the forecast. I would favor the broadening formation layout, and but it's uncertain if we get the major pullback in 2024, more likely in 2025 or something like that. We shall see. Now, going to SPY and getting away from the log charts, let's look at the regular charts. This is the 12-year, the not 12-year, the 2023 levels, the high, the mid, the low. We go into the daily. What we should be seeing is the midpoint becomes support in any kind of pullback. And as you, if you've been following from last week's video, let's turn on some stuff. There's a broadening formation going on here. Played out relatively fine, but now it's time for this to break down and to get at least a retest at the midpoint, but more likely go even lower. And I left the 2024 levels, 2023 levels, sorry. What I think happens in the very short term is we push higher, then we start going down at least to the midpoint here to 470. But probably we'll get a retest of here. Then we go higher again, and then we go down for real down to 2023 midpoint. Like this is gonna be the correction that's a 10% correction, and it's either coming now. If it's not coming now, it's going to be in March. Like this is, if we stay high here, meaning by the end of January, then this is going to come in March. Many lines. Let's the template is this top here. So we are probably somewhere around here. We'll have one last push up. We have a substantial correction here, probably to the broadening here, to the broadening level, which is around this level here. We go back up. We have another correction for OPEX. We go back up and go even higher. And then we have the big correction, which is equivalent to this level here. And that should be the retest of the 2024 midpoint, followed by a mega rally, another mega rally. We are in a bull market. There is nothing to contradict the fact that we are in a bull market. So this is kind of the play out I see. We go very, very high in the next leg of this bull market to 540-ish is my target. This should happen between something like March, April, and June, or actually it's September. We again, it's not gonna be a straight line like I drew here. It's gonna have some ups and downs, but probably by the time we reach the election season in September, okay, September 3rd. This is the period of weakness that that will start. And looking at when was the last election? 2020. This is what we'll be looking at to happen in September as well. And this was, I don't know, 10%, I think. We're looking to get a 10% pullback from this level in September, which is the approximate retest of this level here. And again, a double swing or even higher, and something like this. Again, I just drew it for the sake of drawing it. It's not, don't take it literally, please. Yeah. So this is my 2020 if 24 playout. I have to get used to saying 2024. Then, if it's the broadening formation, uh, this would be the target, like 300-ish. This would be a crash. Again, we're talking way, way into the future if we get a broadening formation playout. If we don't get a broadening formation playout, let's look at the other scenario. What would be the midpoint at that time? Log 4300, something like this. So let's go back to SPY, get back to regular. The other scenario would probably be the 2024 free midpoint acts as support again, and we keep going higher. This is the other scenario. So this is going to be the level to look out for all of next year. If we test it, it's a buy, especially if we test it early in the year. If we test it later in the year, we have to reassess based on the setup at that time. But most likely, it's going to be a buy as well. Don't never bet on crashes unless it's actually driven by external events. But yeah, this is kind of what I expect we will get in 2024. This is just 25%. Yes, this seems like a regular kind of bear market ish correction, but that we bounced off of. That's it for now. I wish you all a very good 2024, Have a good one. Bye bye.